Welcome back to another Tech Talk from MarketEdge.com, your source for unbiased technical stock research on over 5,000 stocks and ETFs. My name's Rachel, and with me today is David Blake, here to discuss what happened last week in the market and what we should look for as we head into this week. David, how are you today?
I'm doing well, thank you.
Very good. Let's jump right in.
Well, we had a mixed week last week. We had the major indexes diverge a little bit from the blue chips. And a lot of that was because investors are still souring on this AI spending spree that we're getting out of the big cap technology and Mag 7 stocks. And they're rotating into the cyclical sectors, which we've been talking about here for the last couple of weeks. Although you see this rotation going on, you don't see the whole market, the S&P 500, making new highs. That's because a lot of those big cap tech stocks are overweighted in the indexes. As they come down, you're taking off maybe 30 points instead of what normally would be 15 to 20 points on another stock that wasn't overweighted like that. But anyway, early in the week, we had the Dow Jones, the NYSE, and the Russell 2000 briefly notch new intraday highs, I believe. And then during the week, the Russell 2000 scored several new highs. Well, on the other side, the flip side here, we had the Nasdaq and the Nasdaq 100. They turned in one of their worst weekly performances in almost a year. So again, this wide divergence is not always a good thing to see. In fact, I made a little note on Friday's weekly market letter, and that's that most of these, including like Microsoft, Meta, Amazon, Netflix, Tesla, they're trading below, as of going into Friday, trading below their 50, 100, and 200-day moving averages, while Apple, Nvidia, and Alphabet were still below their 50 and 100-day moving averages. So again, you can see that these things have really broken down, and that's a lot of profit taking that's causing that to happen. But on the good side, we did see on Friday, we saw some buying coming in to those stocks, which the market's going to need that if we're going to continue to make new highs. Now, in addition, we saw a lot of those stocks, like Microsoft, actually have retraced all of the movement that they made off the rally off of the April lows this year. And that's a lot of selling. A lot of people they want to make sure with all this multi-billion-dollar spending that they're putting into these infrastructure plays and AI, that investors want to start to see results coming out of it pretty soon. Can't just talk about they're going to spend another 100 billion in a quarter to get caught up with all this stuff. In the tech world, things can change pretty fast. And I think maybe at some point investors are going to wonder what happens if some of this AI stuff gets changed and we find something new to get excited about. But anyway, okay, let's go on from there. A lot of the selling also was in the SOX, the Philadelphia Semiconductor Index. It was up 100% from the April lows going into last week. At the end of the week, we did see it fall down 7.9%, but it did tumble on Monday with the Nasdaq about 5%. Then it was up, I think, on Thursday, like 4%. But at the end of the week, we were down again 7.9%. The stocks in there are so volatile. I mean, you have Micron Technologies is all of a sudden becoming one of the third or fourth biggest market caps in the market. It was up 14.5% after earnings. Then I think on maybe Thursday or Friday, it was down 10%. It's down today, but you have other semiconductor stocks that are picking up the slack on that. So that's something to watch. Now, when I'm talking about the rotation out of some of those stocks into more cyclical areas, and we've mentioned several times in the last couple of weeks that healthcare is one of the beneficiaries of this rotation. And that led the market higher the Dow higher anyway, last week. We had Lilly outperform, Amgen was strong. And the Nasdaq biotech ETF, IBB, is the symbol on that. It was up 7.9% last week alone. The biotechs were pretty much doing nothing for quite a while. And then all of a sudden, we've seen quite a bit of a movement going into that. Okay, here's the IBB. As you can see here from last year, pretty much nothing. Then we kind of had a little bit roll off into those April lows. Then again, sideways and sideways again. And this is quite a breakout over in here. If we go to the second opinion and go over here, I want to take a look at the point and figure chart, which I think you always kind of want to make sure you look at the point and figure charts before you go into something. This is a triple top breakout. And if you really want to get technical, one of the things that technical analysts will do is they will count over the number of squares here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. And on the 14th one, they would take this breakout here and they would go up 13. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We have about 5 more X's to go. This consolidation pattern plays out the way it normally does on point and figure charts. And you can read about that on our site. Okay, so going on from there, we also saw outperformance in some of the more defensive sectors. Utilities were strong, REITs were strong, consumer staples, they also outperformed. Well, most of the damage, again, was in the growth sectors of technology, communication services, and consumer discretionary. They saw the biggest sell-offs. But even despite the fact that the Nasdaq was down 4.5%, 7 of the 11 sectors were higher. So as you can see, that rotation is leaving just a few sectors and moving into the broader market. So that's something to look at. We also saw a little bit of the traders lighten up a little bit on some of the other assets like precious metals. Gold has been getting hit pretty hard. It hit a 7-month low intra-week. Cryptocurrencies are below 70,000. They've been hammered. And I saw this morning that the company that keeps buying, Michael Saylor's the CEO, he's been buying Bitcoin for the last several years. Now he's going to sell $1 billion worth out of his company to raise up some more cash. So I don't think you're going to see much action in the cryptocurrencies here over the short term. Now we just see yields inch a little bit lower, which today has reversed itself. If you look at the yields today going higher, that's the fact that the White House lost their bid to remove one of the Federal Reserve officials. And because of that, it exerts against their independence. This move for the Supreme Court to keep the Federal Reserve more independent allowed interest rates to tick higher a little bit. So the 10-year Treasury actually fell last week from 4.5 down to 4.376. And then today, that hasn't moved up too much. It moved up a little bit. Over the weekend, it was down a little bit more, but now we're back up to that 4.45, something like that. So oil prices continue to come down again. They did move up on Friday a little bit. They've rolled over again today as the U.S. and Iran have plans to meet to try to get some of this peace deal or ceasefire deal worked out a little bit. We'll see how that goes. A lot of investors are putting a lot of faith in it, but the economy is going so strong. With FactSet research is looking for 22% earnings growth for the second quarter, and that's on top of 20% earnings growth in the S&P 500 for the first quarter. So it's hard to keep the market down like that, although that's why we're making new highs in a lot of these indexes because of growth like that. So anyway, the technical condition of the market last week, when you have the indexes diverge like they did, it's mixed. The Dow Jones, the NYSE, the equal weight S&P 500, which is the symbol in that's more of an ETF like RSP, where if you bought the regular S&P 500, the ETF symbol is SPY. I have myself, not recommending this, but I have a split between the RSP and the SPY. The main reason is when tech is outperforming, you want to be in that. And the SPY, when you're seeing this rotation like that, it might be a little better to be in the RSP. You can look at this if you don't mind changing once in a while. Here's the SPY on our chart, and you can see it over here. Now, if you compare it to the RSP, here you can see the SPY has been outperforming over here while we've had this big rally in the big cap techs off that April lows. But now we're starting to see it come down, and you're starting to still see a steady uptrend on the RSP. But it's something that's a little bit different. We saw on Friday a little bit of a bounce after these big stocks had retraced almost the whole move off the April lows. We're having another bounce in that segment of the market again today. And you have to have exposure to these despite the rotation, because you never know when they're going to all of a sudden just have the institutional buying come back in. So that's something just at least to take a look at, and comparing that RSP and SPY might be something to diversify your holdings a little bit. Okay, finally, we did see market breadth mixed. The NYSE advanced decline line actually made a new all-time high on Friday. That we consider a leading indicator of market direction, because it means that more stocks are under accumulation. We have good underlying breadth today, so it should make another new high. Well, actually, the breadth today is actually kind of mixed, so nothing breaking out yet. But the fact that the NYSE did make a new high on Friday is a positive for the broader market. And the Nasdaq AD line has been kind of a fairly narrow range going back for several months since early April. So that's telling you that neither the bulls nor the bears are really in control of that. So that's something to kind of keep an eye on. The number of new 52-week highs, which we like to look at in the NASDAQ, in the last 3 weeks, they haven't changed a lot, but there has been expansion in the number of new lows. On Thursday, we had 344 new lows in the NASDAQ, and that was the most new lows since March 30th. So we'll kind of look at that. And then on the other side, the NYSE new highs, they continue to outnumber the new lows. But if you just looked at that chart, you wouldn't be thinking, boy, everything's going up. It'll be like 117 new highs to 83 new lows, 150 new highs to 90 new lows. So that's not really giving a broad signal one way or the other, but it is leaning towards the bullish segment. Okay, finally here we got the investor sentiment. Boy, everyone's jumping on this. As soon as they got that peace deal or ceasefire thing signed, the bulls came out in full force. We had the retail investors jumped in for up to 44.9 for a second straight week. That's the most in 5 weeks. That's the first time that they've been above the 37.5% historical average again for 5 weeks. And then the active investment managers are basically all in. They're at 98.6%. And that's the most since last week in December. However, I think they were at 98.2% sometime in February. So it's not a big difference. When they get up to that, they're basically all in. They're not going in on margin yet. But as I mentioned, margin, FINRA came out last week and the margin is hitting a new high. Now that's something to watch when I talk about how these become contrarian signals when they get to extremes. Just the fact that you keep getting new highs, all-time record highs in margin is something that you just want to watch in the back of your mind, because if the market, something happens to disrupt the market and you start getting a lot of selling, it can induce more selling. And in fact, almost sometimes lead to a capitulation because people get margin calls and they have to sometimes sell other equities to cover the margin calls. So anyways, not overly aggressive yet, but just be aware that things are heating up for the bulls. They're kind of liking this. Now, this week is going to be a short week. Normally, there's not much going on at all on the July 4th week. You see the Wall Street traders usually take off Tuesday afternoon, sometimes Wednesday ahead of the weekend. But this week, there is a little bit more information coming out. Now we have Nike, which is going to release their earnings tomorrow. We'll see how that goes. The shares are down about 36% year to date. So it's all the way back to where it was in 2014. But then on Wednesday, we get the ADP employment report will come out to see how many new payrolls are coming out. And then the big report, the BLS, comes out on Thursday. That's the jobs report for June. Right now, I think they're looking for 113 increase in non-farm payrolls, and that's down from 172,000 in May, but still a healthy number. And they expect the unemployment rate to stay unchanged at about 4.3%. So again, we'll probably see some choppy trading, maybe a little bit more volatility or action just because of those jobs reports coming out. But other than that, for the markets to go a little bit higher here, you're going to need participation from those big cap tech stocks. And I think that as of the last 2 days, we're starting to get that. We're starting to get some people nibbling on those stocks. If you look at the charts in here, one way to see whether you want to add to those positions if you already own them would be to look at some of the moving averages. Over here, you can see we're pretty far down from the 200-day moving average. Here's the 50 pointing down. This is a horrible chart. Usually when they fall below these main averages, you want to be selling. And here you'd been up here in 489 in Microsoft, and now we're down here at 350. So that's a big move. Kind of watching this thing. If you're thinking about buying some, you want to see something like Microsoft or NVIDIA or something that come up and start to challenge these much watched moving average support and resistance lines, because to get through those areas, you're going to need to see not just mom and pops buying into those stocks. You're going to want to see the different funds coming back in. And here we had a nice volume day on Friday. So that's something you also want to see. If you're seeing this thing coming up and challenging these moving averages, it's also nice if you can see a little bit more volume coming in at the same time. So not expecting a lot this week, but pay attention to the jobs data. And we'll see if we can get a little bit more bounce off some of these tech stocks. And that's about all I have for you today.
All right. If you have questions for David or anyone else on the MarketEdge team, please feel free to shoot us an email to support@marketedge.com. Your first 2 weeks of technical analysis on over 5,000 stocks and ETFs with an easy-to-read, long, neutral, or avoid opinion are available at marketedge.com. Until next time, please don't forget to like and subscribe, and we'll catch you next week.